All right, well, hey, good morning, everybody. This is John with Crypto Top 10, here to talk to you about some of the trending articles in the crypto news space. As always, off the top, thanks to everyone who has subscribed wherever you're finding this content. It really does make a difference, and I do appreciate it. And depending on where you're finding me, you can check out the link or a collection of links down in the description that you can follow to check out all of the articles talked about today. So without further ado, let's hop on in. Going to be talking about Kava. So Kava just announced its intention to host a cross-chain money market on its Cosmos blockchain to capitalize on DeFi opportunities. Kava is pretty new. In fact, you can hop on over CoinMarketCap if you make an account. You can get a little bit of free Kava. There you go. Kava said in a statement on its website that it wants to build an application called Harvest that will enable users to borrow or lend digital assets like, Bitcoin, Binance Coin, Binance Stablecoin, Kava, and USDX. So some standard stuff, some not so standard stuff. Customers will be paid in interest and in Harvest's governance token HARD. So Harvest will integrate Kava price reference data from Chainlink to facilitate cross-chain transfers. The firm said that the platform could be accessed by anyone, anywhere, as it is open and permissionless. So not too bad. Standard for DeFi. Really, at this point, there's a lot of DeFi projects that are just hitting the space right now that are all doing similar things. Makes me feel like 2017 all over again. Because at the end of the day, we, as a crypto community, probably don't need 500 different DeFi projects. We probably need like maybe 80. So we'll see where it goes. Kava CEO and founder Brian Kerr said that it was important that the company offer a governance token. Its governance token, HARD, will harmonize decentralized activities within the lending and borrowing ecosystem. There we go. Harvest users holding HARD will be able to manage reward distribution in the network and choose which digital assets can be featured. And Kava said that 20% of the total amount of HARD tokens to Kava stakers over the next few years. So, again, that's a pretty standard distribution anymore. All in all, not a bad setup. I'm not seeing it do anything too crazy other than it's based off the Cosmos blockchain and not Ethereum. Just fine with me. Ethereum is struggling right now. But there's your Kava update. Uniswap. So last week, the newly launched Uniswap token was the undisputed star of the crypto market. It really caused quite the stir. Prices went crazy. They're going crazy again today, though not in a good way. All users who have ever used the decentralized exchange had received at least 400 Uniswap token in an airdrop on Wednesday. Investors and traders who did not receive the Uniswap token stormed Binance, Coinbase, or Huobi exchanges to buy it up. Hype surrounding the Uni token drove the price up to $8.59 on Friday. Wow. Over the weekend, however, there was a massive sell-off. Probably everyone who made a crap ton of profit on it was getting out while the getting was good. I mean, if you got 400 and you sold at the peak, nice. So the Uni price fell yesterday to $4.64. Trading volume for the coin also plummeted from $6 billion on Friday to $1.5 billion on Sunday. But while the price of the token's falling, business on Uniswap is of course better than ever. Makes sense to me. We'll get into why in just a little bit, but long term, I mean, that Uniswap token I think is still going to be a good buy and hold for a lot of people, but short term, people are going to get their profit. Makes sense. Possibly as the result of the increased attention to Uniswap through the Uni token, the capital locked within Uniswap smart contracts has increased massively. Well, according to DeFi Pulse, on September the 17th, the day Uni launched, Uniswap was allocated $748 million. That value is on its way to triple. At the time of writing, its smart contracts included up to $1.94 billion US, up 12.94%. Pretty gosh darn insane. And then there's a bunch of technical analysis down there, which if you want to pop down in the description and check out this article for yourself, you can read up on it. but really just want to talk about Uniswap and its price. It is fluctuating massively. It is a brand new and heavily speculative asset, but the fundamentals of the program behind it are stronger than ever. So in my mind, it's a buy and hold if you've got the money to spend and want to be risky. But again, I'm just some guy in his basement talking in a microphone. I have no reason to be saying any of this, and you should do your own research. This is just for me having some fun. All right, well, let's hop on over, talk about some Ethereum Classic. So as it grapples with multiple security breaches, RE3, 51% attacks in August, Ethereum Classic Labs has partnered with ChainSafe and OpenRelay in hopes of increasing its defense against these attacks. In a post, Ethereum Classic and its core dev team will work with both ChainSafe and OpenRelay to develop and test security procedures. I mean, about time, quite honestly. OpenRelay will help Ethereum Classic to develop practical simulations and models for the proposed features, enabling testnet infrastructure and designing and implementing testnet tests, while ChainSafe is working on a review of the many security proposals to keep the network safe. Alright, I'm liking this. They're actually, doing some pretty robust things. They're not just paying it lip service, so I'll give them that. But the attacks that they saw in August, they caused exchanges like OKEX to warn Ethereum Classic it's going to delist it if it doesn't upgrade its security. So honestly, that's the real reason why they're doing this huge push. All of a sudden, they're open, they're vulnerable. Exchanges are like, yeah, we're going to delist you because you're costing us more money than you're making us. Makes sense. They're a business. That's what they're going to do. So they're really going to be pushing the security thing and trying to close any holes that there are, so that way they don't end up having to completely lose out on their business. It would effectively kill the blockchain. It's struggling pretty darn hard as it is anyways. But there you go. That's your Ethereum Classic stuff. Fun little thing. So we're talking about the U.S. Financial Crimes Enforcement Network, or FinCEN. So leaked documents imply the agency's revamped efforts to identify illicit transactions and money laundering may not be sufficient, but they're not talking about crypto. They're talking about traditional banks, because crypto is actually doing something right. So BuzzFeed reported that it received, FinCEN has received thousands of documents detailing suspicious activity reports, or SARs, from banks to FinCEN between 2000 and 2017. Would not be just banks, but anyone who deals with large amounts of money. So casinos would be in that thing as well. According to the news outlet, these reports offer an unprecedented view of global financial corruption, the banks enabling it, and the government agencies that watch as it flourishes. In short, as long as a bank files a suspicious activity report that it may be facilitating criminal activity, it can pretty much immunize itself and its executives from criminal prosecution, because then they can be like, we told you it was suspicious. However, this SAR effectively gives them a free pass to keep moving the money and collecting the fees. So basically, they still allow these people to continue banking. They just go, hey, this is suspicious, government, suspicious, and they just kind of push it over there. And then the government does nothing about it. Or honestly, probably what happens is they can only go after so many people at once, so they go after the worst ones, which make up a small percentage of the actual suspicious activity reports that are sent in. So the financial regulator has announced it's going to be making sweeping changes to its anti-money laundering rules. Although the financial watchdog receives millions of SARs in that 17-year period, it was not always able to force banks to effectively prevent the money laundering. Like I said, there's only so many people, there's only so many hours in the day, so they kind of have to rely on the banks to self-police, and after decades of nothing happening to them, it makes sense to me that the banks have gotten a little bit lax. So that's on FinCEN. They need to get their butt in gear, make these changes, and start actively pursuing the companies that facilitate these transactions as opposed to the individual users, because if they can get the banks to start denying these SARS filled people from doing their thing, then that'll probably solve their own problems. But hey, For once, it's not crypto. Blah, blah, blah. How about that? All right, let's hop on over to Bitcoin and its blockchain growth. All right, so the Bitcoin blockchain is over 300 gigabytes. Woo. That would mean the size of the full Bitcoin blockchain as of September the 19th, according to the blockchain.com. This is the size of the full Bitcoin transaction history for the past 10 years. It's also the amount of information full mining nodes need to download and keep on their hard drives after syncing with Bitcoin's network. That is it's a long download. I know how long a 30 gigabyte video game will take to download on my network sometimes. So the idea that you're going to be dealing with 10 times that, well, I mean, it's worth it for a large Bitcoin mining firm, but dang, it's still a lot. It's actually not that bad compared to Ethereum. Their blockchain is already over 5 terabytes, and it's increasing at record speeds, obviously with everything going on, also with growing block sizes. Though with Ethereum, you can run a pruned node. It comes in at 165 gigabytes. So it's a little bit more manageable, but imagine the amount of solid state hard drives you would need for the full 5 terabyte node, knowing that you'd probably need to go to 10 within the next few years. It's quite insane. In the first 4 years of its life, however, hopping back over to blockchain, or Bitcoin, its blockchain only reached 20 gigabytes. It was only in 2016 when it reached 54 that its growth started accelerating, likely due to the amount of us jumping into the network. It now grows at about 58 gigabytes a year. So from 2009 to 2016, it was only 54, and now it's increasing by 58 a year. It's pretty darn big. One aspect of Bitcoin's bloat is unspent transaction outputs, or UTXOs. These are basically some Bitcoin is sent and the remainder of the wallet is sent back to the wallet as unspent. So there's like this little back and forth. While they're only taking up about 4 gigabytes of space now, they could become a scalability bottleneck in the future. And there's a project called Utrexo. They're trying to solve it by compressing these proofs into under 1 kilobyte, and it provides a long-term scalability solution. So not too bad. Project's gotten some backing. BitMEX's parent company has given them, $40,000 to help develop it. So they're working on it. But still, I thought this was an interesting little article. We don't realize sometimes just the massive amount of information that is on these blockchains. I mean, Bitcoin having 300 gigabytes is insane. Ethereum having 5 terabytes is absolutely nuts. But they do have smart contracts and all these other things going on with it. So it makes sense that it's a little bit more robust, for lack of a better word. But still, interesting little topic. All right, let's hop on over here. So Andre Cronje, Wi-Fi's founder, some people are talking like he might be working on a Fantom-Based Uniswap competitor. So on July 17th, 2020, yes, I know we're talking about a little bit a while ago, he announced the release of various projects under Yearn Finance, as well as the government's token for the protocol called Wi-Fi, which at the time he called worthless, and we all know how that went. It didn't take long for users to recognize the potential of the platform, which, coupled with Wi-Fi's incredibly scarce supply of 30,000 tokens, drove its price into the sky, into the moon, out towards Mars and the asteroid belt. He's now hinting that he's working on this Uniswap competitor based on the Fantom blockchain. He took to Twitter to hint that he's working on a Uniswap alternative on another chain that needs base layer liquidity. Makes sense. He also shared a picture of the prospective logo on the upcoming decentralized exchange and automated market maker. Well, at a glimpse, it does look like Uniswap's logo with the unicorn. The unicorn's got a chef's hat. It's got vampire teeth, because it's probably going to try to vampire attack Uniswap. And its eye has what looks like Fantom's logo. How about that? Cronje explained that this is nothing related to Ethereum's Uniswap, but the logo they made was cool. At the time of writing, there are no further details on any upcoming release or anything like that. However, with a name like Cronje attached to it, anything he announces is gonna be hot out the gate. I wonder if he'll call it worthless as well. I'm glad to see some other coins. Like, I do like that Kava is building it on Cosmos. I do like that, they're potentially building something on Fantom. It helps relieve some of the pressure on Ethereum. It allows other blockchains and other ecosystems to get some liquidity injected into them. It all works. Just again, I'm not sure how many of these projects we're going to end up needing long term. But hey, we are definitely in the beginnings of a crazy new way of doing things in this world. So we'll just have to wait and see. And then to round things off, just a little bit of flavor for you, BitMEX is operating a Bitcoin node from space. Not only that, you don't need to be connected to the internet for it. So in order to participate in the Bitcoin network and to confirm transactions in mine, an active internet connection is normally required. However, Bitcoin's BitMEX exchange has developed a new system that uses a satellite system to access the Bitcoin blockchain. No internet required. Essentially, all one needs to do is install the satellite dish, point it in the right direction, connect it to a laptop running Linux, and some custom blockstream software, along with a modified version of Bitcoin Core 0.19.1. I actually think this is really cool that you don't need the traditional internet for it. I mean, the practical aspects of it, I don't know, but it's a pretty interesting idea. As BitMEX describes, the connection is stable, and it is possible to connect to the Bitcoin network in remote areas without internet. However, there's an approximate 2-minute delay to the Bitcoin nodes connected to the internet at the same time. BitMEX points out that it has only been operating the new system for a few days, and current experience is limited. So they're like, yeah, we know there's this 2-minute delay, but calm down. We just dropped this. Give us some time to work out the kinks, which I think is fair. It's the first of its kind that I'm hearing about, so give them the benefit of the doubt. Though you gotta know, the satellite-based system is perfectly suited for improving censorship resistance of the Bitcoin network and fending off some forms of different attacks, according to BitMEX. For the experiment, the Blockstream Satellite Pro Kit was tested with a flat panel antenna at a price of just under $1,200. So in my opinion, it is just a little bit out of the realm for a traditional person to want to invest in just yet. But the fact that you can run a Bitcoin node without an active internet connection, well, you want to operate one out in the middle of Montana, you can operate one out in the middle of Montana. There you go. The off-grid potential for this down the line is really, really good. So I think this is a very fun article to talk about, and it makes me think about what we could be seeing in the next 5 to 10 years. Yeah, I'm really excited for this, and I really like it. So, but that rounds things off for some of the trending articles in the crypto news space today. Hopping on over to CoinMarketCap, it is yet another bloodbath day. All I can say is it's not just us. The stock market is definitely struggling. In my mind, it's going to get worse before it gets better. A lot of the long-term effects of the coronavirus crash are starting to come into effect. They're starting to become real. So we'll just have to see. Multiple top 10 coins down double digits. I mean, Ethereum typically being down 8.5% is the worst of the day, but Polkadot's down 14, Binance Coin's down 12, Chainlink's down 14.5. In fact, if you look at the 24-hour change, Orchid is up 26%, and that's after it's had quite a bit of a drop. But the biggest loser is Hedge Trade down 25%, with Uniswap down 24, sitting at $4.30. So things are definitely a little bit rough. Aave is down 20% as well. Like, it's a bloodbath out there. So keep those hands strong. Don't just sell things. This is but temporary. Within a month, ideally we'll be back well above these points. But that will do it for Crypto Top 10. Again, my name is John. I do appreciate everyone who subscribed, and if you've made it to the end of this video and you're still here, well, you might as well subscribe as well. You seem to like what I'm doing, and you can check out links down in the description to research all the content. Oh, and for those of you on YouTube, hit that little like button. That really helps me out, like, so much. Alright, that's enough of me shilling myself. Y'all have a great day, and I'll talk to y'all tomorrow.